Hey everyone, I'm thrilled to introduce to you our cutting-edge linear regression channel indicator, which is an extraordinary tool to revolutionize your trading strategy with its exceptional win rate and unmatched accuracy. Developed using advanced algorithms and meticulous analysis, this indicator has emerged as a game changer for traders seeking consistent profits in highly dynamic markets. Harnessing the power of market volatility, this indicator provides you with unparalleled insights into price movements, helping you to make informed decisions with unwavering precision. Its ability to adapt to rapidly changing market conditions ensure that you stay one step ahead no matter the direction of the market. The linear regression channel is definitely worth a closer look, but before we begin, I want to ask you to show your support by smashing that like button. Also subscribe and turn on the bell, enabling notifications to stay up to date with our future videos. Let's see the indicator in action. On the chart, we have the euro against the US dollar in the 15-minute time frame. And what you will notice after attaching the linear regression channel to your chart is that it is built using dynamic support and resistance lines. These lines represent high probability turning points in the market, so you can use these to determine your optimal trade entry and exit points. To do this, we are going to make a couple of changes under its settings. Under the Inputs tab for the indicator, we are going to change the line width of the first central band from 2 to 3, and then we are going to change the second deviation line width from 1 to 2. With those changes done, we can now focus on the outside of the linear regression's orange lines with ease. Now, what we can see from price action for this example is that we broke the orange line, telling us there's a high probability chance that price may bounce back from this resistance zone. And additionally, we can see that price action has also formed a double bottom with a strong green candle away from the zone. This means once the candle has closed, we can enter our buy trade with the stop loss below the recent swing and aim for a minimum of 1 to 1.5 risk to reward. Alternatively, you can use the regression bands to determine the take profit levels. For this trade example, I'm going to set my stop loss at 15 pips and aim for the take target of 25 pips. As the trade plays out, you will notice these support and resistance lines are dynamic, meaning they constantly adapt to market movements as they happen. So you can be sure it gives you the most accurate entry and exit signals. Next, let's take a look at the other side of the spectrum with a sell or short trade. This time on the chart, we have the US dollar against the Swiss franc in the 15-minute time frame. And firstly, from price action, we can observe that we are currently in a downtrend, with the market forming lower lows and lower highs. Additionally, we get a strong pullback against the overall downtrend, providing us with a high probability trade entry. So, for the short trades, price breaks out of the linear regression channel's orange line, and this break tells us there's a high probability that the price will bounce back down. Now, after the close of the rejection candle, we can enter our sell trade. And for the sell trade, I'm going to set my stop loss a couple of points above the wick at 10 pips and aim for the lower band at 27 pips. So the secret behind the linear regression channel's capabilities is all about math. Statistics show that 70% of price action happens within the inner blue lines of the regression channel, and that 90% of all price action occurs within the orange line of the linear regression channel. And these facts provide us with an important trading edge. To do this, let's take a look at another example using our linear regression channels. However, this time I'm going to introduce two additional indicators to our analysis. For this example, I have selected the British pound against the US dollar on the hourly time frame. And the first indicator which I have attached is our supply demand pro. Additionally, under the settings for the indicator, I am going to unselect the following options to clean up our charts. Now, the second indicator is an exponential moving average with its length changed to 200, and I also changed the style and color to make it more visible. Now that we have all of the components, let's go over the rules. Firstly, as before, if the price ever goes outside these orange lines, this could represent a high probability trade entry, meaning we can now take a closer look at our under 2 indicators because there's a great chance that price will move back inside the linear regression channel. The reason for adding the indicators is because looking for high probability entries provided by the linear regression indicator and in the direction of the underlying trend will further increase our chances of winning. And in this case, the underlying trend is up as we are above the moving average, so we are only looking for opportunities to go long, meaning when the price breaks out of the lower orange line of the linear regression channel, this gives us our long setup. Additionally, we'll see it has a rejection away from a demand zone, which further aligns with our overall analysis so we can enter our buy trade. For the buy trade, I'm going to set my stop loss below the swing at 55 pips and aim for 150 pips at the top of the regression channel. As expected, the market moves up aggressively and we secure a lovely 150 pip win. Next, here's another example of using the indicator and strategy. And for this trade, I have selected the AUD/USD on the 15-minute time frame. And what we can see is that the market is currently in an uptrend, forming higher highs and higher lows. And then price retraces and breaks outside the lower orange line of the regression channel. That gives us a long trade setup, which additionally we can see the retraction away from our 200 moving average, confirming the analysis. All this means is once the bullish candle has closed away from the zone, we can enter our buy trade with the stop loss below the swing and aim for the top part of the regression channel, keeping our risk to reward at a minimum of 1.5. For this trade, I'm going to set my stop loss at 12 pips and my take target at 28 pips. Now, a few candles later, we get another rejection away from the 200 EMA after price action touched the lower orange line of the regression channel. This means following the same steps as before, we can enter another buy trade. And for this buy trade, I'm going to set my stop loss below the demand zone and my take target will be set at the top of the regression channel, maintaining the same risk to reward as before. For this example, I will set my stop loss at 15 pips and my take target at 36 pips. Let's see how this trade works out. We can see how strongly the price bounces back up as soon as it touches the linear regression channel's orange line and the EMA, which serves as a floating support and resistance. For this example, we are securing another 36 pips. Next, let's take a look at another trading example. This time on the chart, we have the US dollar against the Japanese yen in the 15-minute time frame. From price action, we can see that we are currently in a downtrend below the EMA, meaning we are only looking for sell or short trades. Then the price has pulled back towards a supply zone above the orange line of the linear regression channel. This pullback is our entry signal for our sell trade to continue with the downtrend. and after the close of the bearish engulfing candle, we can enter our sell trade. For the sell trade, I will set my stop loss above the supply zone at 22 pips and aim for the outer regression channel, maintaining a minimum of 1 to 1.5 risk to reward. By combining these indicators, we can enter another high probability trade with confidence. So, are you ready to take your trading to the next level? Get your hands on the Linear Regression Channel today. To take advantage of the state-of-the-art indicator and enhance your trading experience, visit our website. I would recommend taking a closer look at our TV Champ membership, where you will gain access to all our custom indicators for TradingView and any future releases. If you want to dive deeper into these indicators and learn more, head over to our YouTube channel, where we provide detailed insights and tutorials. I hope you found the information in this video to be helpful. Until next time, happy trading. Bye.